Hello, family. Pastor George here with SET-4-LIFE and your pastor of stewardship. We're going over tax tips. Last episode, we hit so many, we brought Michael Johnson back for some more. Don't go anywhere, and we're ready to share them. Hello, family. Welcome back to this episode with Michael Johnson about taxes. Hey, let's get right back into it. So personally, this is my personal thing, and this has, this is just my personal feeling. I think college savings plans, and I think Roth, at some point the government's going to stop these because they're just too good of a deal.
Sure.
I think like a Roth IRA is too good of a deal.
Yeah, that's why they have income limits. People that make over $150,000 can't even invest.
Right.
So anytime you hear something like that, you know it's a good deal, right?
Yeah.
If the government's limiting it.
Right, just like the gift tax.
Just like the gift tax.
That you can give, which is another thing is that you can gift things to people, right?
Oh, sure.
How does that work? How does the gift tax work?
So the gift tax is also a lot of misinformation on the gift tax. There is a lifetime exclusion of gifts of over $11 million, right? A lot of my clients don't have to worry about that. But every year, if you give more than, this year it's $15,000 to someone individually, you have to report it. Not a big deal, you report it. They don't pay taxes, you don't pay taxes, but you have to report it, right? So the IRS says over your lifetime, you can only give away that much money, over $11 million, before we start taxing you. Not a big deal, right? But every year, if you want to start giving some money away, if there is some excess, if you're at that level.
Money or stock.
Money or stock, yep, doesn't have to be cash. You can start giving that away. You can start that as part of your estate planning, right? $15,000 a year, sock it away. Kids don't even have to know that it exists.
All right, I'm gonna come back to Roth IRA, but there's two things I learned so far as a father. Yeah. Okay, my kid's working up to $12,000 a year. That's what we're doing. If anybody need any help, just send me the kid. My kids will be over there working. Just pay us. That's number one. Two is that parents and grandparents. We did a series called. We actually did a seminar called "Don't Sell Grandma's House," where we talked about how people aren't passing on generational wealth. Is grandparents instead of I know we got to do G.I. Joe with the Kung Fu grip. But right now, let's look at giving stock to kids and grandkids.
Absolutely.
And whatever they're using. We teach in our class dollars and cents, like whatever these kids are using, look at buying stock in those companies. And I told a story about it. And by the way, we're not giving out stock recommendations, and we're not doing that today. And also we're not giving you direct tax advice. What we're doing is we're giving you guidelines to have, but then later on we'll give you an opportunity to talk to a professional about it. And one of the things is my son was playing this little video game. Sorry to mention the swear word, everybody. Roblox. This little game, and he wanted me to give him some money to buy some virtual dollars. I told him that every time I say that, my skin just goes. Anyway, he wanted me just to spend virtual that money. Yeah. And I was like, your dad doesn't use real money to buy fake things, and we bought the stock.
Beautiful.
And then he went upstairs and told we own Roblox, and all the kids. I'm gonna tell all the kids. But imagine parents started just buying. We spent the same amount of money on. That's what I'm saying. Just in the same amount of money you spend on, I didn't say waste, on those things, but make sure you're also investing. And then, I didn't know you get a tax break on all this stuff.
Absolutely.
Okay, gotcha. Okay.
Every single financial decision you make has a tax implication. You may or may not know it, but it does. Every single thing has a tax implication.
I'm gonna remember that. Every single thing you do has a tax implication. So that's why, just when you make a decision. Yeah. Okay, so now we've hit that and we've done that. Can we just hit one more thing about the Roth IRA and then we'll move to other things?
Absolutely.
So what about people always use the term you ever heard, the backdoor IRA or doing things like this?
Absolutely.
He explained like if someone's working somewhere, they have a 401k, and then they aren't working there anymore, and their income is less. Just different things about that, or just different areas like this.
Great question. So the backdoor Roth IRA, like I said, you have income limitations. The IRS says, hey, this is too sweet, particularly if you're making too much money. So we're not going to allow higher earners, right, to put money in, but you can convert an existing IRA or 401k, if you have a 401k rollover, into a Roth account. It's called a backdoor Roth, right? So you will pay taxes on that money when you do it, right, the first time, because the IRS wants their money, but after that, it's going to be tax-free. You have to manage that rollover because it may be big, right? It could be you've been working at a company 10, 15 years, could be a good amount of money. And so you want to work with a professional to maybe split that rollover, or conversion is really what it is, over multiple tax years. Because what we don't want to do is spike your tax bracket in that year. Right. And then all of your income's now being taxed at particularly maybe the highest tax bracket out there.
Right.
Whereas you can maybe split it over 2-3 years and keep your income tax bracket manageable.
All right. Everybody did a good job. I let him talk that whole time. I interrupted him one time. Now, everybody know me. I'm going to interrupt him about 3 times. Now, when he first talked about the thing, because you want to know why? You know what he was talking about? Strategy. So what happens is, let's just use $1. We've been working for a while. It's $400K. You don't want to convert $400K because all of that, or whatever it is, you're going to be in the top tax bracket.
Absolutely.
And then there's words, I'm kind of filling in words, but that's raising your marginal tax rate.
Got it.
So what happens is when you're raising that rate, so what you do is, he said, spread it out over a couple of years. 3 people should have just clapped. Pastor Tom talks about dollar cost averaging all the time. Like, invest monthly, like do things monthly. So what you do is break it out over a couple of times to figure out, get a professional, and then find out what the best, most efficient tax bracket is to how much you can convert at a time. And then pay the top of the bottom of the tax bracket.
You got
it. You can show me how to.
You got it.
They know how to cut it. The bottom of the top. Is that right? That's right. Bottom of the top.
Yeah, you got it. Bottom of the top.
Oh, I'm doing good. Okay, bottom of the top. And then you're right there, and then you pay less tax, and you figure that out each year and convert that?
Convert it. Yep.
Oh.
It's a system.
If that didn't make sense to you, make sure that's why you want to make sure you talk to a professional and you learn how to do that. Absolutely. Up against all of your deductions and everything like that.
100%.
Okay, anything else you want to say about retirement before I go into corporations?
Do not raid your retirement unless it is a dire situation. This should be the last place you go for funds, because what happens is the IRS wants their cut and the state wants their cut. Lovely California, we have the highest marginal state tax rate at 12.5. IRS, we're at 37. You could end up with half of your balance in your hands after all is said and done.
Yep. You know what we call that? We call that getting a divorce from your money. You know when people
exactly what it is.
I want half.
That's all you're getting.
You're getting half from your money.
Yeah.
Now, we were teaching all these classes on real estate and everything, and Danette, one of the, got this money from our retirement and buy a house, or I want to do this and that, and we're saying, but you understand that what happens is you're killing the golden goose.
Killing it. Yeah.
And then you're moving over here, but then when they put the money down in the house, they still have to keep paying the mortgage. Oh, sure. And their mortgage is higher, and now they can't save back in the retirement. Yeah. It's a retirement account. So Absolutely. We're trying to explain to people, this is a retirement account. Sure. That's why we do a wealth building, and we build retirement, and then we set up a plan. By the way, so just everybody, so you're clear, we have a class here we teach. It's called Dollars and Cents. We walk through all these plans with you and make sure you have an investment plan, a debt plan, an investment plan, and then also a tax and protection plan, yes. And then also an estate plan. But but you saying that, I really appreciate that, because I think people always say, oh, it's $100,000. I'm just going to get $100,000. I'm like, oh no, you're going to get about half of that. Yeah. So what you're really doing is, imagine running a race. And and then at a certain age, having to start back over.
Fresh.
And there's something called the time value of money.
Oh.
That means that money is worth more now than it is in the future. It's about that over time, it takes time for it to build.
Yes.
And it's growing. So no, that's really, really good.
Sure.
All right. Sure. That's all right. Anything else about those?
Nope. That's great.
Okay, guys. We're going to now go into corporations.
Absolutely.
So there's something called S corporation,
Okay.
a C corporation, and an LLC.
Absolutely.
So what are those? What's the difference?
Great question. So let's start with the basic, right? The LLC.
Yes.
That is
By the way, everybody wants to do that right now.
Everyone wants to do
That's
that.
the
That is a huge
like you
buzzword.
walk in now. What are you doing? Hey, look, this is my LLC. I got an LLC.
Yeah,
you got to talk to me
LLC.
different now. I have an LLC. I'm sorry. Go ahead.
If you don't have LLC, people look at you now. You got to have an LLC, right? Whether it's you have a rental home, you have a side business, you sell things on eBay, whatever it is, right? The L and the L, limited liability, right? We want to limit our liability. I'm not an attorney, so I'm not going to get into it, but we don't want anybody that you are doing business with to attach your personal assets to your business activities, right? LLC, it's basic business, right? Other than being a sole proprietor. Let's back up. Sole proprietor is I'm going out as Michael Johnson, setting up a lemonade stand, selling lemonade. I'm a sole proprietor. There's no difference between my business and myself.
Right.
Right. LLC, you have a separate legal entity. It has its own tax ID number, own EIN, right? It is its own living, breathing thing. Even if I'm 100% owner, I can sell shares to other folks. I can split it with other people. I can split it with my wife. We can be 50-50. It is a separate legal entity, and you have income and expenses related, right? So make $100. What happens? The LLC shows a profit of $100. That income is passed through to your personal income. The company doesn't pay the taxes. You, as the owner, pay taxes. That's just the difference, right, between an LLC and what's called a C corp. Or a C corporation, the big companies, the Walmarts, the McDonald's of the world. If you have over 100 owners, you have to become a C corp. The latest tax law change made it easier for these folks. Dropped their tax bracket down to the lowest tax bracket it's ever been. We're at 21% to be a C corp. But you have to be wary if you're just a mom and pop shop that you don't want to pay tax twice. It's called double taxation, because a C corp pays its own taxes, and then the owners of that C corp pay taxes again.
Right.
So most folks.
And S corp.
An S corp. Let's go over S corp. S corp is a tax treatment of an LLC. You can start an LLC and then ask the IRS to be treated as a subchapter S. S corp, just a part of the tax code, allows you to earn income, make a profit, and avoid what's called self-employment tax. That's the big one. Self-employment tax is this 15% tax that the Social Security Administration and Medicare want you to pay 7.5% on your wages and 7.5% as the employer, right? So that's 15%. As opposed to if you were a W-2 employee and you were just working, right? They would take it from you. Before you see it, right? That's 7.5%. What's this FICA? What's this Medicare on my tax? And then your employer matches. So that's where the 15% comes from. So on top of normal income tax, a LLC has to pay self-employment tax. If you become an S corp, you get to skip that. You say, you know what? Forget Social Security. I don't want to put money away. I don't know that it's going to be there when I retire anyway, and I trust myself, right? So
you're going to invest it. You're going to invest it yourself.
Yes. I'm not going to go spend it. I'm going to be disciplined. I'm going to take that money and invest it myself, because at some point, Social Security, you'll have to be 85 to get it. They'll put some type of crazy limitation. They have to, right? Because the system is broken. People used to live for 5 years in retirement. Now people live for 25 years, 35 years in retirement. The system is just not built for what's happening now, for the longevity.
For people to live,
It's just,
I think there's a statistic here that 10,000 people turn 65 each day.
Oh, sure.
And they keep living. So now there's too many people. There's more people. There's usually 45 people paying into, a lot of people paying into it, and then a few people receiving it. Now there's a lot of people receiving it, and there's a lower number paying into it. So it doesn't work out mathematically. I get that. So one of the things is, if you're an S corporation, so you don't pay self-employment, you don't pay those type of taxes, anything like that.
Exactly.
Okay.
So that's a big deal, right? 15% is a lot.
Okay.
As opposed to paying that in addition to income tax. We're talking 50% of your income again, right? Once we get to that level, but you become an S corp, you take care of your own taxes, you're down at a lower tax bracket. Why?
This is okay. I got it. No, I'm coming back to LLC and just why everybody's doing. Why is everybody doing that with real estate?
So the liability piece is the first, right?
Okay.
Someone falls down, breaks their leg, sues you for $2 million. You look at your insurance policy, you're only covered for $1 million. Okay, now they want to come after you for the second $1 million,
Right.
whatever, right? The other is now I get to deduct everything. I get to deduct all the things I normally would if I had a rental property, right? The mortgage interest, property taxes, HOA, repairs, a management company, but I can also have corporate level costs. If I need to go have a annual retreat with my co-owner, my wife, and it happens to be in Hawaii, and we talk business, we have minutes, we take notes, and we have a business meeting, we get to deduct those costs for our corporation. This opens up lots of different ways. And let me be clear, these are all legal. Don't listen to anyone that starts giving you some other shadier, gray area deductions. But if you keep
and those are legitimate, and those are things that we've talked about.
And they're things that big corporations do all the time.
Yeah, and we've talked about that.
Sure.
So I'm going to show us that there was a time when, but also it's also a great way of helping people is having an LLC. Like if you find out there were issues, like there was a Hurricane Katrina like a really long time ago.
Yeah.
A lot of people migrated to Houston because that's pretty close. We started buying properties in Houston. Yeah. So you start having an LLC. So one of the things is if you own property out of state is you do need to visit that property. So I was telling people like, hey, every time just do that. One time tell people you're coming. Then there's sometimes you don't tell nobody.
Show up.
You just show up.
Yep. And with the LLC,
maintenance
you get to deduct.
You deduct that, and then you do that. I'm from Minnesota, and one of the things is that I have clients in Minnesota also from some of my other businesses. Sure. So when I go there, let's say I'm going there 5 days. 3 of those days I rent a car and I go around and meet clients. Yeah. You know what I mean? Like so then what? I'm sorry. So if I do that, and let's just say I'm a LLC.
Absolutely.
Then what would I deduct if I go there 5 days?
Yep.
Okay. And then let me tell you what I'm doing during those 5 days. I flew on an airplane. Sure. And I flew back. And then you know what else I did? I ate. Yep. And I met with clients. Yep. At the Mall of America. I ate at a restaurant. I just ate at the Mall of America with my kids. But anyway, I met with people. I also ate. So I'm sorry, what can I write off?
Airplane. Right. Let's say you were there 5 days. 5 days. Worked 3.
Yeah, I write off.
You get that. You get the airplane fare because you had to get there for those 3 days. Right. Back and forth. Right. You get the 3 nights at the hotel. Those other 2 are on your own. Right. Let's be fair. Right. Your meals while you were out. Your meals while you travel, right? You're at LAX waiting to leave. It's called a travel meal. Right. Even if you're not with the client, you get to do it because you're on business, right? The Ubers or taxis while you're there, moving around, or your rental car, deduction, right? So most of the trip, those other 2 days, you're out with your family, your friends. We'll leave that part off, right? We're not going to write those off, but for sure, everything else we get to deduct. It's a travel expense, and you get to deduct it, and you let the IRS pay you for doing your business. Right. So actually, you're getting your money back. You know, money people paid in taxes. Exactly. But no, so that's really good. Anything else for businesses or people should kind of know a little bit tax-wise to kind of prepare? I'd say the things they should kind of do. Absolutely. So some of the things that happen when you do start your own business, as opposed to being a W-2 employee, which is very important because what we've been conditioned to do is be passive with our income taxes. You go to a job, you work, before you even see your paycheck, there's 5 lines of deductions already taken. Your employer has a whole staff of payroll people doing things behind the scenes, sending checks to the state, the Social Security Administration, the IRS. You don't see it. You see your paycheck, that's what it is. At the end of the year, you file your taxes. Right. When you become a business owner, all of those things are now on you. You have to pay, right? You have to pay quarterly. People don't know that. You're supposed to pay every single quarter to right yourself with the IRS. If I make $100,000 a year as a business owner in net income, I should be paying taxes on $25,000 every single quarter. I need to be writing a check physically to the IRS, to the state, to get myself square, as opposed to waiting until April 15th to file. I look at this big, huge tax bill, and the IRS says, guess what? Now you owe penalties and interest because you didn't keep up quarterly. Right, but hold on. So something someone should do with the business is pay themselves a salary. Absolutely, 100%. Right. Pay yourself a salary. You get the deduction for paying yourself, right? So it's square, right? You square yourself away. that money that you earn, you can now put away in one of these retirement accounts we talked about, now tax-free. We get this tax-deferred account. And so the business is getting the write-off, you're getting the write-off. It's a win-win situation.
That's good. So that's good, because that's one of the things I think people miss, is that, because I get asked that question about giving everything. I run a business. How should I do it? First question I ask is, how much you pay yourself as a salary?
Sure. You
want to pay yourself a salary. That way, as you said, you can do the pensions, you can do that,
yes,
and you can learn to budget your business better that way.
Absolutely.
Because also you offer bookkeeping services as well.
Sure. Yeah, we do bookkeeping, kind of the basis to get folks up and going. Journaling through accounts. We like, the big monster out there is QuickBooks Online. There's other services, but something that will attach to your bank account, make it easy. Download your transactions, categorize them for you, so you really can keep up monthly, quarterly on what your business is doing. It also helps to just manage, right? Just so you know, right? You should know these things, how your business is doing. But also every quarter I need to know what my profit is so I can write that check.
Right.
We have to have that discipline, right? To write that check every quarter,
right,
and send it in. So at the end of the year, guess what? I owe the IRS nothing. I'm filing my taxes, and we're getting a refund, or we're paying $100 or
right,
less, right? So we're right there. That's
right. And one thing that we kind of cover on the show, SET-4-LIFE, we talk about businesses that they want to have 4 areas they focus on. One is marketing, the other one's operations, the third is new products and services, but the fourth is a financial dashboard. So I just want to kind of go over that with you. Absolutely. And then I have one other question for you. Absolutely. So a financial dashboard is, you guys, is just some financial numbers you would need to know. If you're on an island, and he said, if they just send me these numbers, I know how well my company is doing. Yeah. Can you tell me what 2 of them are? One, I'll let you know what one of them is.
Absolutely. We got to talk about the top line. What did I bring in?
It's on the balance sheet.
Yeah,
I'm sorry. Go ahead. I'm sorry. Go ahead.
We got to talk about my gross margin, so I know what I brought in versus what I have to spend to keep my business open. Right. And we got to talk about that that bottom line net income. What am I taking home to feed my family? I need to know these things to manage my business.
You need to know those for a business. That is so good. Yeah. Hey, and then I just got to ask this question. Because just for my own education, for helping people, why should someone use a professional in the area? Well, I'll say right now in the area of taxes, but why should we use a tax, or just do online, or just go somewhere else? Why should
absolutely. If you have the competence and the simplicity of a regular W-2, nothing special, you don't have a rental, you don't sell stocks, you don't have a business, you don't have children with various education, student loans, college costs, you can go use TurboTax, go use Block Online, what have you, if you are comfortable with it. However, the tax laws change every single year, right? Every single year. And it is impossible to keep up. It is difficult for me as a tax professional to keep up with all of the different laws, because it just changes. But the real reason, I think, is really just strategy. And I tell people all of the time, when you become a client, you get me. It's not just this tax return I hand you, say, thank you very much, Mr. and Mrs. Client, see you next year. If there's something that comes up in September, right? We're not talking tax season, just September. You're at work and there's this rumor going around. You can write this off. Guess what? You can call me and say, hey, Michael, is this true? Right. Or, hey, Michael, I was thinking about buying this house. How do I get money out of my 401k? I'd say no. Can I, right? How do I fund it, right? What's the best strategy? Do I pull it out of the bank? Do I pull it out of a mutual fund? Do I pull it out of do I take a loan on my 401k? We'll talk through all the scenarios and we'll make the most efficient plan. That's what you need, right? You have to have a partner walking through this with you, because there's always something. And like I said, every financial decision has a tax implication.
Man, I'm gonna remember that. I'm gonna use it. I don't know. I'm not gonna pay.
You can use it. You can use it.
But I wanted you to do that, and also I want everyone also to look at this. There's a gentleman by the name of Malcolm Gladwell. He wrote a book called Freakonomics, and he said it takes 10,000 hours to become an expert at something. So like, we're experts in the area, studying the Bible. When you're a pastor, like you study Bishop Palmer, he is an expert in the area of doing that. Mm-hmm. Me financially, like, it's like you can do stuff the hard way, but also if you find someone that is, it's like having a tour guide to journey through life. And you brought it up twice, so I'm gonna bring it up the third time. Also a strategy. See, we're talking about taxes right now, for 2022.
Yeah.
You see, there's certain things that you can do now that can affect that. If you just get your taxes done at the end of the year, sorry, in the financial industry, we call that scorekeeping. What happens is if you just do your taxes and just bring the paper in and lay it down, there's nothing you can do. They can just say, here, this is either you get first of all, this is what they do at the church. So what they do is they give it to you, but they have the box, right? Everything in a shoebox. Then they put their hand over and speak in tongue. They start yelling out Disney characters, Nemo, everybody. Then what they do is they give it to you. Then they say, look, at the end, this is how much you either gonna get back or this is how much you owe. But see, right now you wanna sit down with professionals.
Yeah.
And then build a strategy not only for you, but for your family. And today I think we covered all the base we talked about from yourself, we talked about for your business, we talked about your family, and then we're talking about generational. Then we can also talk about, seniors, certain things about your parents that maybe they want to do, whether they're later on moving in with you, medical, we can do those things, but just sit down with a professional and do this. And then you know what? And they can even stop you from getting the things that may happen in the future. So I'm going to throw the first one out there. You guys, I'm going to give them even a bonus question that you guys should even have to be charged to answer, but I'm going to ask them, what's up with cryptocurrencies? How do those, I hear they're being reported.
They are now being reported by some of the exchanges, which throws all kinds of questions out there. How do I report my crypto earnings? Do I report my crypto earnings? Do I have to report my crypto earnings? The answer is yes. They are going to be treated just like a security, just like a stock in Apple, right? I bought it for one price, I sold it for another. If I made money, it's a capital gain. If I lost money, it's a capital loss. Even if your broker doesn't report it, and I'm calling them broker, that's a loose name.
Can I use the word custodian or where it's being held? Where it's being, so everybody else, I'm sorry, where it's being held at. I'm sorry.
Exactly. Even if they're not reporting, which they don't have to yet, because they're not securities technically, right? The IRS now has a box on your tax return that you have to attest to whether you sold a cryptocurrency. And so I think that's their way of making sure that you're going to report it. And if you don't, now you're on the hook. Right.
So that means, and by the way, we brought in the SEC, Securities Exchange Commission. We brought her in here to talk, and they're talking about how they're going to begin to regulate this, because it's not regulated the way they're looking at how that's going to work with currency. So you understand that? You mean if you add that anticipation, if you click that box, that means they can come back in the future, like they come back 2 years from now and say, hey, you sold this and you made, because all the people on where my phone is, but all the people on Instagram, I made $1 million in cryptocurrency. They're gonna come back, okay, cool.
Oh yeah, cool. Yeah,
where's our 300?
You said no. Yeah, you checked the box that you didn't sell any, but yeah.
Where's your $300,000?
Yeah,
that can happen.
Yeah.
Okay. All right, everybody. You might want to get a professional.
Yeah.
All right.
Got to report it.
Thank you so much. This was so helpful, everybody. I hope you enjoyed our conversation today. But as was said, every financial transaction has a tax implication. I remember that. That'll be in some of my future stuff, by the way. But that makes a big difference in your life. Do you see how one conversation can change your life, can help you in these areas? So we want to make sure we're providing this information and we're helping you. Can you do me a favor? I would just like for you to think about 5 people, friends, coworkers, family, that need to hear this, and then also share this with them, because this does make a big difference in building generational wealth. And we look forward to seeing you on our next episode, but also we'll also put Michael's information also into the chat if you'd like to contact him in the future. But it's all right if you come back for a future episode in the future?
I enjoy
so we'll
it.
do that. We're going to dig a little deeper into some of these corporations and make sure everybody has what is it? LLC.
The LLC.
We want you to be successful. So hey, everybody, on SET-4-LIFE, we want to live our lives by design, not by default. We'll see you on our next episode.